Hello and welcome to Business Incorporated. I am Bisi Adebayo. Well, let's kick off the show right away with Nigeria's headline inflation, which rose by 0.07% to 12.20% in February 2020 from 12.13% recorded in January. And that's as increases were recorded in all divisions. Data released from the National Bureau of Statistics shows that core inflation, which excludes the prices of volatile agricultural produce, stood at 9.43%, up by 0.08% compared with 9.35% recorded in January. Food inflation rose to 14.9% from 14.85% due to increases in the price of bread and cereals, fish, meat, vegetables and oils, and fats. Urban inflation rate increased to 12.85% in the month under review, from 12.78% recorded the previous month, while the rural inflation rate increased to 11.61% from 11.54% in January. And despite those high inflation numbers, now the market here in Nigeria reverts its negative trend, gaining 1.16% at intraday. Talking about the markets now, in South Africa, the JSE was also positive by 1.88%. On the flip side, Egypt's EDX 30 shed 1.94%, and Kenya closed negative on Monday. Of course, the market in the Middle East continued its bearish trend at intraday, with Abu Dhabi's index losing the most by 6.33%. The market in Dubai was also negative by 4.95%, as the country's largest lender, Emirates NBD, slipped 4.6%. Saudi Arabia's index was 2.19% higher after shedding 4 straight sessions, while Qatar's index was 1.06% higher, and that's set for its third consecutive session of gains. And in Europe, the markets gave up early gains today, with a fast-spreading COVID-19 putting the continent in a shutdown mode and fueling fears of an impending recession. Let's talk to Chelsea Delaney to make sense of what's happening in Europe. She joins us live from the Frankfurt Stock Exchange. Good afternoon, Chelsea. It's another rocky day for markets. What are investors saying where you are? Could we possibly see a bottom soon?
Well, the conversation now is a lot different than when we started this morning. At the beginning of today, there was a lot of talk over whether we had reached a bottom, whether stocks had fallen far enough to really account for the economic damage we're seeing from coronavirus, and whether we're going to start seeing people come in and start trying to buy up some of these stocks which have fallen so far. But after a pretty big gain at the open, we've just seen a continued slide in the DAX. It's down about 1% now. And I think investors are taking a step back and sort of reevaluating and thinking about how we're still really only at stage 1 of containing the virus in Europe. We're just today, for example, here in Germany, starting to see more restrictions on public life. France has just gone into lockdown a few hours ago, and the economic impacts of this are going to take a while to be felt. What all these restrictions are going to mean for corporations, for small businesses, for consumers is going to take a while for us to see. But I think investors are going to continue to see more volatility ahead until we have more clarity on what all this means for the global economy.
German auto giant Volkswagen said it's halting production throughout Europe. How are investors taking this news?
This wasn't a complete surprise to the market. A lot of other European car makers, Fiat Chrysler in Italy, Renault, Peugeot in France, have also over the past couple of days announced pretty much complete shutdowns of their European operations. Volkswagen has already been struggling with problems in its supply chain. It has a very globalized network of suppliers, so the shutdowns in China because of coronavirus, the shutdowns in Italy have all made it really difficult for the company to get parts to its other factories. And now with these social distancing measures, which are obviously needed to help protect workers, that's going to make it pretty much impossible for them to keep operating at the same level. But they're also just seeing a really extreme drop in demand, because as people are under quarantine, as people lose their jobs, that's going to obviously really reduce the demand for vehicles.
Well, Chelsea, let's talk about the Philippines now, which has become the first country to close its stock exchange due to the coronavirus. Could other stock exchanges toe the same line?
This has been a really big discussion in markets over the past several days, but the Philippines is actually taking this step is a big moment for global markets. The stock exchange in the Philippines is saying that they didn't want to do this, that they're being forced to by the government, and they're only planning on being closed for a couple of days. But there have been a lot of conversations all over the world, including here in Frankfurt and in New York, about closing trading floors. The stock exchange here says that they are not planning on this at this point. They have given some people the ability to work from home or work remotely, but that they're not planning on it at this point. And the U.S. is also starting to take some steps to prepare for the possibility that this happens. But global market regulators, investors say it's really important to keep markets open right now because a shutdown could really spook investors further. As it could certainly escalate the tensions we're already seeing in markets.
All right, Chelsea, we'll see you again tomorrow. Thanks for those updates. And in London, the FTSE 100 had opened higher today, but that rally quickly ran out of steam and the index fell 3%. Well, it's intraday now, and let's see how the market is faring with Juliana Olayinka. Good afternoon, Juliana.
Good afternoon, Bissy.
All right, I see you're not working from home yet, but bring us up to speed with the intraday numbers. Are the markets still in the red?
Well, they are in the red, but it's been up and down all day at the FTSE. It opened a little bit up with a sense of optimism, and that was really because a lot of investors believed that after what happened with Emmanuel Macron and his 300 billion euro stimulus to the economy, they're expecting the same thing from Rishi Sunak. But of course, it's so volatile at the moment. At intraday, the FTSE All Shares down 1.58%. The FTSE 100 also down by 1.35%, and the FTSE 250, the domestic market, that's down 2.67%. In currencies, the pound is down on the dollar by 1.38%. £1 is actually worth $1.21, excuse me, at the moment, so it's pretty low. Also down on the euro by 0.09% and down on the Japanese yen by 0.35%. Some of the stick-out shares, TUI, largest tour operator in the world, they're still down by 14%. And JD Sports, they're the sports fashion retailer that seemed to, over the past couple of months, stay away from the falling of the high street. Their shares at the moment are down 10%.
Well, let's talk about data from the Office for National Statistics, which shows that UK employment rose by 184,000 in the 3 months to January. And that was, of course, driven by record quarterly increases in full-time and female employment. But is all of that likely to change now due to the coronavirus outbreak?
Well, absolutely, Bissy. This is clearly pre-pandemic data, 0.6% record high rise in employment in the 3 months to January. But yes, of course, that's all going to change. What everybody is talking about at the moment, what's dominating the news agenda in the UK are jobs, job losses in retail, job losses in the entertainment sector, job losses in airports. Heathrow Airport has just released a statement to the government basically saying if they do not receive rescue package measures within the next 48 hours, then their airports will have to shut down, putting thousands upon thousands of jobs at risk. Of course, yesterday, Prime Minister Boris Johnson did ask people. He didn't make it compulsory, but he did say that mandatory, you have to stay away from pubs and restaurants and cinemas. And this has really spooked a lot of pubs and restaurants because, of course, even though it's optional at the moment, they are concerned about their cash flow. A lot of small businesses have been letting staff go almost immediate effectively. So this is a big concern. But going back to the data, yes, this is pre-pandemic data, and there are concerns over the next couple of weeks and months. Of course, we saw record highs, and we could actually see record lows in the UK for employment.
Not good news at all. But the Business, Energy and Industrial Strategy Committee met this morning to consider the impact of coronavirus on businesses and workers. Well, what sound bites are you getting from this meeting?
Well, there are so many, Bissy, it's hard to condense. But, I've got to say, and I think anybody, any economist or business analyst speaking out of Britain at the moment is saying this is a critical time for British business. At that select committee meeting, there were several huge business leaders present, no bigger than the Confederation of British Industry. And they were basically reiterating what I just said, which is that hundreds of thousands of jobs are at risk. There's a lot of focus now on the 4 p.m. local time, 5 p.m. Nigeria daily briefing, which will be given by Prime Minister Boris Johnson, but he will be joined by the Chancellor of the Exchequer, Rishi Sunak. Now, last week, he was applauded for his performance at the dispatch box. About £30 billion was put aside to try and support businesses, as well as, of course, the interest cut from the Bank of England. It's clear now that that is not enough. Most people are focusing at what's happened in France. We've got a similar sized economy, and Emmanuel Macron has put 300 billion euros aside for businesses. And so if you compare that 30 billion pounds with 300 billion, there's a huge shortfall. And that's exactly what most of these businesses are asking for. Some of the measures that they're saying is they want a cancellation of tax payments for at least 6 months. This is PAYE, VAT, corporation tax. They also want a postponement on minimum and living wage increases, which were due to take place in April. They want that postponed. Also, as well, a lot of people in the self-employed and in the employment sector are even asking the government to speak to landlords and ask them to forget or forego rent payments. So, we are going into a really critical stage at the moment, and it is changing all the time. But right now, Bissy, all the focus will be on that 4 p.m. news briefing by the Chancellor of the Exchequer and the Prime Minister, just to see how they plan to support businesses and whether this compulsory whether this mandatory optional closure and shutdown of London will become compulsory over the next 24 hours. Thank you.
All right, Julian, it's just a few hours away from 4 p.m. Of course, I'm sure that you will bring us updates much later in the day. But please remember to stay safe always. We'll see you again tomorrow.
Thank you.
And stocks in Asia Pacific were mixed today as the seesawed after shares on Wall Street plunged to their biggest day drop in more than 3 decades overnight, and the Philippines shut its markets temporarily. Stocks in Australia led gains among the region's major markets as they attempted to recover from the plunge a day earlier, with the ASX 200 closing 5.83% higher at 5,293.4. Meanwhile, shares in mainland China ended their trading day lower. The Shanghai Composite slipped 0.34% to around 2,779.64, while the Shenzhen Composite edged 0.42% lower to approximately 1,704.74. Hong Kong's Hang Seng Index advanced 0.61%, while South Korea's Kospi, on the other hand, closed 2.47% lower at 1,672.44. In Japan, the Nikkei 225 closed slightly higher at 17,011.53, while the Topix Index surged 2.6% to end its trading day at 1,268.46. Overall, the MSCI Asia ex-Japan slipped how much? 0.12%. And in the U.S., stock futures were higher this morning, though, after Wall Street suffered massive losses on Monday amid concerns over the economic impact from the coronavirus outbreak. Earlier on, the Dow Jones futures indicated an implied open of 400 points. The S&P 500 and Nasdaq 100 futures were also higher. Those moves came after President Donald Trump tweeted that the United States will be powerfully supporting those industries like airlines and others that are particularly affected by the coronavirus.